Hello and welcome back to the channel. You probably don't know me, but yes, you did subscribe to my channel. I know I haven't posted a video in like a month. I don't want to make any excuses. I am actually really trying to be consistent on both my channels, but that's no excuse. As I was saying, today I just wanted to come back and provide some value, which is the reason why I created this channel, just to provide value on trading, investing and all that stuff along my journey, just to help out as many people as I possibly can. Now, to bear in mind, I'm not an expert and I do not teach people how to trade, because in my eyes I have to at least bank a few mils in the bank before I can say, yes, I'm going to teach you how to trade. This is just my personal journey that I wanted to document so I can look back at it and so other people can have an insight and help them to progress at a little faster rate. So that being said, today's video I just wanted to talk about 9 reasons why 99% of traders, beginner traders, fail in the Forex market. Now, this stat is out there. Like, there's a vast majority of people that start out trading that fail. Now, the stat 99% does not actually represent every single trader. When I go over the 9 reasons, if one of those 9 reasons apply to you, then you're within that 99%, or if all of them apply to you, then it's directed at you. But that 99% is just based on historical data. It has no implications of your ability as a trader. But as I was saying, if these 9 reasons, if one of these 9 reasons apply to you, then yeah, you might have to do some rejuggling, if you'd like to say. So now the first reason, I've mentioned this reason before in my trading story about the struggles that I had at the start. But the first reason that I'm going to talk about is being a self-taught trader. So just finding out about the Forex market, wanted to dive into it and finding out the information yourself. So being a self-taught trader. So when I first started trading, I didn't want to pay for a course, as I said like a million times. So I went around the internet trying to find the solution, how to do it, try to gather as much information as possible. And now the information is out there, but the problem with that is that there's no structure to it. So one day you might be learning, the first video you watch, you might be learning about how to take a day trade, and then the next day you're looking at what is a pip, what's the Forex market, what's volatility, what's price action, etc, etc. So the information is out there, which is all over the place. So being a self-taught trader can be detrimental because as I said, there's no structure, so you're just learning everything. And that was the problem that I ran into, that led me to initially go ahead and pay for a trading course. If you wanted to pursue a profession at any, like a degree or something like that, then you'll have to go to university and pay for that course to gather the information that you need to in a structured manner. Yes, the information's out there. If right now I can probably learn everything that I need to know about being a doctor, but without the guidance, without the structure of an experienced doctor or experienced teachers that have been in that profession before, then I'm not really going to get very far. If that, hopefully that comes across and that makes sense. So that is number 1, being self-taught. Now number 2 is risk management. Now risk management for everyone's different. You have some traders that say risk 3%, some traders that say risk 5%. The overall ballpark safety net for like that majority of the professionals would say is risk 1% of your trading account. So risk management is obviously super important, because if you go ahead and risk 50% on one trade, then you only have the ability to make 2 trades with that account. So if you had £1,000 in an account or $1,000 in an account, and you risk 500 to make 1,000, which is a 2-to-1 risk to reward ratio, and you lose that one trade, then you only have 1 trade remaining. And that's not taking into consideration margin or anything else like that. That's something that I'm not really going to be covering. But if you're interested in learning about margins and all that stuff, then obviously get educated. If you want to learn more about education, I will go over that at the end of the video still. So stick through till then, and we'll go a bit more about like further in your education. So even with risk management, like the self-taught traders might have a basic understanding of how to risk management, but as I was saying, because there's no structure of how they've learned it, they might not be doing it correctly. So it's just as bad as I mean, it's not just as bad, it's somewhat getting there, but it's not as good as learning the correct way how to risk manage and how to avoid like currency pair correlations and stuff like that. There's so much more into it that I'll probably make in future videos, but this is just to keep it short. Now, number 3 is majority of new traders want to make that fast money, and they don't really, and some of them might not understand the different time frames. So they might jump straight to a 1 minute time frame. So a 1 minute time frame, as if you have any experience in trading and you know about jumping to a 1 minute time frame, then you can see how bad this is going. I would show you an example, but I'll probably do it in future videos, so make sure to subscribe for that. But basically, going down to a 1 minute time frame, the market is all over the place, and there is no room to really to really identify what direction the market's headed in. It's just like literally loads of noise. And trying to trade off one particular candlestick formation is probably like putting a tea bag in a swimming pool and expecting some kind of result, you know what I mean? So yeah, let's just use that example for now. Trading off the 1 minute time frame as a beginner trader is pretty much it's very bad. Just don't do it. Now, number 4 is probability. Now, trading is based on probability. Just like a casino that I've mentioned before, it's all about probability. A casino knows that probability is in their favor, the risk to reward is rigged in their favor, so they know that regardless of however many people come to the casino and go on a mad winning streak, take away hundreds of thousands, they know that over the long run they will make money based on the probability module. So the probability module in trading is that you're basically trading an edge, and you do not know when that edge will play in your favor. You just know that over time it works out more time than it doesn't. And a little example of this might be if you had a two-sided coin and it is rigged so that 70% of the time it lands on heads, and the further 30% of the times it lands on tails. And every time you win $10, and every time you lose $2, let's say. I'm pretty sure you flip that coin as many times as possible, because you know that you have a 70% chance of it landing on heads. Did I say that right? I forgot. But 70% chance of it landing on one and 30% chance of it landing on the other. So obviously you might lose 30 trades in a row, but that doesn't mean that your strategy is broken or it's not right. It's just like after that 30, if you continuously trade that strategy, then the further 70 trades are going to be all winning trades. Now obviously the probability module doesn't work out like in a set specific order, like every 10 trades you're going to win 7 and you're going to lose 3. If that makes sense. It doesn't work that way. It's probabilities over time. It's a random distribution. There's so much more to it. Now, number 5 corresponds with what I was saying previously on number 4 about the probability module. Now, number 5 is just the random distribution of profits and loss. A new trader, a beginner trader, might go into the market and they might jump into a strategy that they take 10 trades and they might lose 10 trades, or they might win 2 and lose the further 8, and they were like, no, this strategy is broken, it's not working for me. Distribution of profits and loss over time it's a random distribution. It comes in no specific order, and this is why risk management is important, because with risk management, then you know that if you risk 1% to make 2%, then the 70% of the times that you win the 2%, you're going to make more than the 30% of the times that you lose 1%. Overall you made a profit, and that is the random distribution. It's just continuously keep trading that strategy. Now, as I said before, you will not all the time win 7 and lose 3, win 7 and lose 3. It just happens randomly over time, and that's something that new traders do not understand. So that is rule, or the reason number 5. So number 6 coincides with the previous 2, as I was talking about probability and random distribution. Number 6 is consistency. Now you have to consistently trade that edge, that plan for the random distribution of profit and loss to play out in your favor, and the probability module to play out in your favor. If you just place 10 trades and because you lost 6 you'll be like, I'm gonna stop, I'm not gonna do this again, this is not working out for me, then you're missing out on the further 20 trades that would have worked out in your favor. So it's being consistent, trusting in your strategy, and this is why education is important. If you learn in a structured manner, then you'll understand this whole concept of this is what you need to do this, do that, this, then that, and the other, and you'll soon be going on the right path. So number 7 is emotions. Now new traders tend to get very elated when they make a trade, when they win like a nice profit, and they tend to get very frustrated when they continuously keep losing. So obviously if you lose trades and then you decided that this is not for me to stop, then you're missing out on the probability module and the random distribution of whenever those profits can start coming in. So if you placed 3 trades and you lost them 3 and you said I'm going to stop now, then the next 4 trades that you could have won, you're not going to win because you're frustrated and you decided to stop trading. So taking control of that, of the emotional side of trading, and understand how to control the emotions, and just understanding how to control the emotional side of trading and being centered, and just understanding that this is a long-term game. It's not a sprint, it's a marathon. Then you can keep your emotions in check, and then if you lose 3 trades, then it doesn't really bother you because you know your next 10 trades could potentially be winners. Number 8 is keeping track of your trades, journaling and reviewing. So now if you don't journal or review your trades, then you might place a trade and then you don't know why you took that trade. That trade might be a winner or a loser, and if it lost, you don't know why it lost. You're just like, why did this trade lose? And if it won, you don't know why it won. You don't remember what you did. So journaling is super important because you can always go back, see what went wrong, what went right, and then obviously you can tick off all the stuff that went right and add it to future trades, and all the things that went wrong and take it away from future trades. And that's just a way of progressing as a trader. So journaling is something that's very important, and it can make the difference between a successful and a not so successful trader. Last but not least, number 9 is not learning from the right people. Now there's loads of people out there that's teaching people how to trade that's not qualified themselves. Now I could easily decide to create a course of basic knowledge and charge a fee for it, and then expect people to make a killing. And the truth is, that's why I said at the start of this video, I am not an expert, and I don't think I'm qualified to tell anyone how to trade. I just want to share my personal journey and my personal experience as I go along and as I build myself as a trader. So finding someone that has the results, that has the people around them that has the results, that can prove the results, that can show the results, is someone that you want to learn from. You don't want to learn from someone that I can't show you a Lambo, I can't show you a penthouse, not saying that's all the important stuff, that there's traders that are really district and they don't really show anything but they're making a killing. But that's just something to take into consideration. If you're going to learn from someone, then obviously make sure that the person that you learn from can prove to you that they actually know the business that they're talking about. So that is it for the 9 reasons why 99% of beginner traders don't make it in the Forex market. Now, as I said, I'm pretty sure that will be of some value depending on your level or your understanding of trading or Forex. So if that's something that resonates with you and you want to get more value and you want to follow me on my personal journey, then you can consider hitting that subscribe button. Just make sure you hit the notification bell so you're updated every time I post a video. That being said, thank you guys for watching. If you enjoyed, as I said, hit that notification bell and hit that like, leave a comment below on your thoughts, and I will see you guys in the next video.